Welcome to the section on wages, interest, and dividends. This marks the beginning of entering financial information into TaxSlayer. Let's see where we are so far in an actual tax form. So where are we so far? Volunteers are helping taxpayers fill out basic information such as name, spouse name, social security number, and address. We are determining whether a person is filing as single, married filing jointly, married filing separately, head of household, or qualifying surviving spouse. Let's say our taxpayer is telling us they have dependents, so we would need to fill out their info in TaxSlayer Pro. As a note, we do not need the IDs of every dependent that files, but we will need the social security cards of every dependent on a return. Be sure to ask for these as part of the intake. We reviewed the tables and resources in the 4012 to help you determine if someone needs to file, their filing status, and dependents. As a reminder, no one is expected to memorize the tax laws, and using your resource is highly encouraged. By the end of this training, you will feel much more comfortable in terms of tax law and how to file. Now we come to the income section of our tax return. In this particular section, we will discuss determining taxable and non-taxable income, determining earned versus unearned income, reporting wages, salaries, tips, and so on, scholarship and fellowship income, interest income, and dividend income. Later lessons will cover business income and investment income from capital gains. Now we are going to start preparing the return with the section on income. The following presentations will be in the order that you enter the client's tax information into TaxSlayer. This is an example of the year 2023's form of 1040. TaxSlayer will automatically populate the financial information into these boxes after you enter them. You will have the W-2 to refer to, making sure that all the numbers are accurate as you enter. So, how exactly do I determine taxable versus non-taxable income? The Volunteer Resource Guide, the 4012, tab D, Income, page D3, includes examples of taxable and non-taxable income in Table A. That's the table shown below. Take a second to take a look at it. Some forms of income, such as farm income, hobby income, and rental income, are out of scope. See the scope of service chart in the front of the 4012 if you encounter some type of income that you don't recognize. TaxSlayer adds all taxable income together to form gross income. Gross income is all income received in the form of money, goods, property, and services that is not exempt from tax. It includes income from sources outside the U.S. or from the sale of a primary residence, even if part or all of that income can be excluded. Gross income may include part of Social Security benefits received and certain scholarship and fellowship grants as well. Income that is taxable must be reported on a taxpayer's return and is subject to tax. Income that is non-taxable may have to be shown on a taxpayer's return, but is exempt from tax. Some of my favorites not shown here are income from bribes, kickbacks, and illegal activities. Yes, the IRS actually lists those because everything you can think of, the IRS has a publication for. So, if anyone is trying to evade their taxes this year, you can point to a publication for why that is not a good idea. Another reason why we love reference materials at the VITA office. So how do I, as a volunteer, determine non-taxable income? This is Table B, which is listed in the Volunteer Resource Guide, tab D, Income, page D4. This includes examples of non-taxable income. Some examples of non-taxable income include gifts and inheritances, exempt income, Medicaid waiver, veterans benefits, or welfare payments. Exempt income includes such things as interest income produced from certain types of investments. There are some instances when exempt income is shown on the return, but not included in the income tax computation. Tax-exempt municipal bond interest income is an example of this. For many types of non-taxable income, no documents are provided to the taxpayer, so the tax preparer may never see this non-taxable income. However, you should be, as a volunteer, prepared to answer any taxpayer questions about the taxability of certain income. If you're not sure, refer to this table whenever there is a question of income that you are not certain about. In addition to taxable and non-taxable income, income is also classified as earned and unearned. This makes a difference when figuring eligibility for certain credits. You also might hear the words passive income, which refers to investments which the taxpayer does nothing and the investment or interest grows. Wages are earned income because you have to work to earn it. Bank interest is unearned income because your money sat in the bank and you gain some money without doing anything. Drum roll, please. May I present to you Form W-2. You will likely see more of this form than any other form turned into you because this is how employee income is reported. Employers must report wages and other employee compensation on Form W-2. Employers are not required to mail forms of W-2, but they must make them available to employees by January 31st. Employees may need to pick up Form W-2 from their employers or obtain it electronically. Most employers issue a standardized version of Form W-2 wage and tax statement. There are typically 4 copies of the W-2 provided to the taxpayer. Copy B is filed with the tax return for paper returns. Copy 2 is for state and local taxes, 2 copies provided. And copy C is for the employee's records. Just be careful not to enter multiple or duplicate W-2s. Once you enter all forms W-2 into TaxSlayer Pro, it carries the total to Form 1040 and transfers necessary information for credits, deductions, withholding to other sections of the tax return. Make sure you're entering numbers correctly and take your time to review. When we enter a W-2 into TaxSlayer, the software creates an electronic copy that is e-filed with the return. It also adds a W-2 to the PDF of the return. The Employer Identification Number, or EIN, and Employer State ID Number must be entered correctly. Incorrect EINs will cause a return to be rejected. As a part of the quality review process, volunteers should always be double-checking these numbers. What if the taxpayer has an ITIN, but a Form W-2 is showing a different SSN, or Social Security number? Use the taxpayer's ITIN when starting the return. Enter the Social Security number as shown on the Form W-2 when prompted by the tax software. Refer to the Volunteer Resource Guide for instructions. Box 7, Social Security Tips, is for tips reported to the employer by the employee. Social Security tips are included in Box 1, Income and taxes have been withheld on this income. Box 8, Allocated tips, is for tips the employer allocates to the employee. This is usually for large establishments. Allocated tips is money given to the employee out of the tip pool and has not been reported in Box 1. Social Security and Medicare taxes are not withheld on allocated tips, and the income is not included in the amount in Form W-2 Box 1. There is separate reporting in TaxSlayer for unreported tips. Unreported tips are tips that the employer knows nothing about, so these will also increase 1040 wages and cause additional Social Security taxes to be calculated. So what do Box 12 codes mean? There are numerous code letters that the employer can use to designate certain items such as employee contributions to the company retirement plan. Refer to the list of codes in the 4012 page D11. Note that some codes make the return out of scope. If you see a code from Box 12, please look it up. There are 3 check boxes in Box 13. You will enter exactly what you see on the W-2 into TaxSlayer. TaxSlayer uses this information to calculate retirement savings credit, among other things. The most common use for Box 14 in California is for CASDI, or California State Disability Insurance. That code will show up on a W-2 if it is needing to be entered. Teachers' pension plan contributions also may appear in Box 14. The tax software will automatically transfer qualified voluntary retirement contributions to Form 8880 for retirement savings credit. Still not quite sure how to file income? Publication 4012, tab D, page D6, has the information on how to enter a W-2 into TaxSlayer. The new 4012 has expanded this section in subsequent pages that go into detail on the TaxSlayer entries. Please pause this video, bring up page D6, and walk through it. Write down any questions you may have for your practice labs or site coordinator.
Let's take a look at reporting as a household employee. The term household employee refers to an individual who works in someone's home, performing household duties such as caring for children, cleaning, or cooking. Generally, an employer is not required to provide Form W-2 to a household employee who earns less than the threshold amount for that year. In this situation, neither the employer nor the employee will owe Social Security or Medicare tax on those wages. However, employers who withhold federal income taxes from their employers' wages must issue Form W-2. Regardless of whether Form W-2 is issued, income must be included on Form 1040. Select the buttons Income, then Less Common Income, then Other Compensation, and select the household employee income in TaxSlayer. If the household employee has earned more than $2,400 and the employer refuses to issue a W-2, the return is out of scope. Income earned by inmates, including those in a work release program or halfway house, is not earned income for earned income credit purposes. In addition to entering the W-2, select Income, then Less Common Income, then Other Compensation, and select Prisoner Earned Income. Then enter the Box 1 amount from the W-2. TaxSlayer will ignore this in earned income credit calculations. In-home care providers may receive a Form W-2 with Medicaid waiver payments that are excludable from gross income. Medicare waiver payments are discussed in more detail in the Business Income and Other Income lessons. See the Volunteer Resource Guide 4012 Income tab for software entries. Now let's talk about tip income. If taxpayers have jobs in which tips are normally received, for example, waiter, waitress, bellhop, or motel hotel housekeeper, be sure to ask about any tips they may have received. All tip income is taxable whether or not it is reported to the employer. Self-employed taxpayers who receive tips, such as hairstylists and manicurists, should include their tips in gross receipts on Schedule C. Let's talk about interest income. On the intake form 13614C, there is a question which asks about whether the taxpayer has interest or dividends from any bank account. If the amount is less than $10, the bank does not have to issue a 1099 INT. However, if the bank did issue a 1099 INT and we don't put it on the tax return, the client will get a letter from the IRS. If the taxpayer states that they received $5, enter an interest item for $5 even if they didn't get a 1099. Box 12 is out of scope if the amount is greater than Box 3. This is an example of if someone has a bond and that bond premium is greater than the bond interest. Box 13 is out of scope if the amount is greater than Box 8. This is where the bond premium on tax exempt is greater than the bond interest on tax exempt. If your taxable interest income is greater than $1,500, a Schedule B is required. TaxSlayer will automatically generate the Schedule B if it is needed. Let's go over the type of dividends or payouts to the taxpayer that you might see on a tax form. Generally, all dividend income is reported on Form 1040, page 1, lines 3A and 3B. The corporate distributions that volunteer tax preparers may handle are as follows: ordinary dividends, qualified dividends, capital gain distributions, or non-dividend distributions. All dividends are reported on Form 1099 DIV. So how do I report dividend information? Generally, all dividend income is reported on Form 1040. Schedule B may be needed if the taxpayer's ordinary dividends exceed a specified amount, or if the taxpayer was the nominee for dividends that actually belonged to somebody else. So what's the difference between an ordinary dividend and a qualified dividend? Ordinary dividends are taxed at the taxpayer's ordinary tax rate. Qualified dividends are taxes at a usually lower capital gains rate. For taxpayers with taxable income of less than $44,625 for single or $89,250 for joint, the capital gains rate is 0%. Above that, it goes to 15% and then maxes out at 20%. Any federal income tax withheld shown on a Form 1099 DIV is reported on the federal income tax withheld line of the return. Foreign tax paid will be covered in the foreign tax credit lesson. On Form 1099 DIV, amounts included in the boxes labeled Unrecapped Section 1250 Gain, Section 12012 Gain, Cash Liquidation Distributions, and non-cash liquidation distributions are out of scope for the VITA TCE programs. Refer taxpayers with the amounts in these boxes to a professional tax preparer. Instructions for entering interest and dividends into TaxSlayer is listed on page D14 in the 4012 handbook. Remember, interest is a form of passive income from banks. Dividends are payouts from stocks and bonds. You'll encounter dividends again in the retirement income session as seniors with retirement plans get regular payouts from their retirement investments. The reason why we don't enter the payer's EIN or address is because that information does not appear anywhere on the tax return. Why is it in TaxSlayer? Don't know. That's one of those unanswerable questions in life that we will never, ever find the answer to. Always enter tax-exempt interest or dividends. This may affect the amount of Social Security income that is taxable or the amount of the premium tax credit. In California, some interest and dividend income is not taxed federally, but is taxed in California, and vice versa. Some examples of these are U.S. savings bonds and treasury obligations are taxed federally, but not taxed in California. Non-California municipal bonds are not taxed federally, but are taxed in California. For more reference information, go to publication 4012, the page D16 for interest, and page D19 for dividends. Let's go over scholarship and fellowship income from Form W-2 and Form 1098-T. Are scholarships and fellowships taxable income? Scholarships and fellowships may be fully or partially taxable or non-taxable. Taxable amounts include payment for services, money used for personal living expenses such as room and board. If the taxpayer received Form W-2 for the scholarship or fellowship, it is considered earned income. Include the amount on 1040 as wages, just as you would for any other Form W-2. Form 1098-T lists qualified tuition and related expenses paid to the school. Verify that these amounts have been paid by reviewing the student's detailed financial account transcript, which lists scholarship and grant money the student received. If scholarships or grants exceed the qualified educational costs, some of the grant or scholarship money may be taxable. In certain situations, the student may choose to include all or part of certain scholarships or grants in income in order to increase an education credit. This is explained in the Education Credits lesson, and examples can be found in Form 8863 Instructions and Publication 970 Tax Benefits for Education. Important to note, if the student is a dependent of another taxpayer and claims scholarship funds as income, the student's return is out of scope. Here in Sonora, this is important to confirm dependency since we have a local community college where students may still be claimed as dependents. This could significantly affect a parent or guardian's refunds if not discussed beforehand. So what if the student is not a dependent and must claim part of their scholarship income? The amount claimed as income is entered into TaxSlayer. Enter the amount of scholarships and grants in the appropriate boxes and click Continue. So what exactly is kiddie tax? Say you have a child who has a part-time job after school. They made $2,500 last year. Kiddie tax is one of those things that sneak up on people. Most have the impression that if you are under 18, you don't need to file taxes. In this example, the child who earned $2,500 will have to pay taxes on half their earnings, since $1,250 is half of $2,500. Anything above $2,500 is taxed at the parent's marginal tax rate. A parent may choose to report the child's income by filing Form 8814, but that makes the parent's return out of scope for VITA volunteers. Let's review. Right now, you probably have a pretty good idea of the difference between taxable and non-taxable income, earned and unearned income, wages and scholarship income, interest income, and dividend income. Once these are entered into TaxSlayer Pro, you may see a possible refund pop up in the upper right-hand corner of the screen in green. Keep in mind, though, that that number is going to change over the course of entering numbers. So if a client happens to see it, you may want to make them aware that no total is estimated until the end of the filing process. Here's the information on what is out of scope for this lesson and out of scope for VITA volunteers. You'll see out of scope pop up as something important to note because we never want to prepare something that we aren't trained for or certified to handle. While we can't recommend any outside tax preparers as part of our code of ethics, I find it best to explain to clients that they would not want us to be doing out of scope filings. They're better off working with someone who knows these specific tax codes. We want each of our clients to be happy with their return. See you in the next lesson.